Recording in progress.
Good evening, everyone. I want to welcome you all to the Tax Resolution Help Center. My name is May. I will be hosting today's session and introducing today's speaker. I will also be coordinating the Q&A chat session at the end of this session. I want to congratulate all of you for taking steps to deal with your taxes from all sources, including income tax, payroll tax, property tax, excise tax, and sales tax represent 35% to 60% reduction in your personal savings and wealth. As you probably know, those with 1% of the wealth in this country have experts to help them pay a small percent of tax. Our goal is to help you reduce how much you pay in tax by educating and informing you on ways to reduce past, present, and future tax expenses. We think you're entitled to live a happier, healthier life by keeping more of what you earn and getting the taxman off your back. Our goal is to provide you good information with the opportunity to ask questions that are important to you. This presentation itself will last about 20 minutes plus 20 to 30 minutes for you to ask questions by chat. I will select the questions and present them to today's expert. And if you can include your first name and your state, that would be great. Other than that information, your identity is not mentioned. The information you are receiving in this session is not specific tax advice. If you want specific tax advice for your situation, you are free to contact today's expert or any of our tax experts at Tax Resolution Help Center. As you know, these group sessions are included in your do it yourself membership fee of $20 per month. If you are not yet a member, please sign up today. We need your financial support. And of course, to better understand what might be on your mind during the session, I might include some polling questions to ask you. I will then finish with a 5-minute wrap up. Also, a survey will be sent looking for your feedback. And finally, this session will be recorded. And today's session's topic is getting QuickBooks Online ready for tax time. And our tax expert for today's session is Adam Neely. Adam is Adam Neely is an enrolled agent and worked as a tax analyst programmer for Intuit, which owns TurboTax and QuickBooks. He is a true expert on QuickBooks and can help you get your financial statements ready for tax preparation. With that being said, introducing Adam Neely.
Hello, good evening, everybody. Um, Happy to be here and help just talk about getting your books ready for tax time with a little special attention on QuickBooks Online. Um, I'm a QuickBooks Pro advisor, and I'm happy to help out if you're a QuickBooks customer or would like to be a QuickBooks customer. So please um, contact the Tax Resolution Help Center if that's something that you may be interested in doing, um, or if in general you just need help with your taxes or need help with getting your books ready for tax time. Uh, so I'd like to just kind of get started here. Um, Starting from the very basics, before you start to get to the point where you can hand your taxes off to your tax professional or even prepare them yourself, you need to make sure that your books are set up in the proper way. Um, QuickBooks Online has company settings. Those are going to be in the little gear icon in the top right-hand corner of your screen using QuickBooks Online. And what you're gonna kind of want to go through there is just go through each of one of those sections, make sure everything represents your business properly, because there are a lot of downstream effects to what happens in the settings. So you want to make sure that your tax year is correct. That's going to directly impact your taxes and the reports that are taken of your books. So if your calendar year, then your tax year is January 1st to December 31st. If you if your business is on a fiscal year, you want to make sure that tax year is included there in your settings. Entity type, pretty important. I'll talk a little bit more about that, but it's making sure that your QuickBooks is set up to reflect the type of entity you are. So is your business an S corporation, a C corporation? Is it LLC, et cetera, et cetera? You want to make sure that those things are set up properly. Appropriate type of along with that. Different types of entities can file different types of tax returns. And again, I'll talk about that a little bit more in a second here on the next slide. And then make sure that you, this is kind of a big one, that cash or accrual basis is selected. Especially if you have like a new tax preparer or this is your first time doing taxes, you want to make sure that when you file your taxes, you file them on the basis that your books are on. So, because it is a little bit of a chore to get to change that in your tax return if you have done it incorrectly in the past and you want to change it, something like that. So cash basis, just basically the main difference is whether you track accounts receivable or not. So if accounts receivable is an asset to you, then you're on accrual basis. If you don't collect assets until you actually get the money in the bank, you're on the cash basis. And you want to make sure that the reports that you pull out accounting software such as QuickBooks are run on the same basis that your that shows that you made a bunch of money on New Year's Eve. If you're some kind of an event company and you didn't actually get paid for those until the next year, you don't have to pay taxes until the next year if you're cash basis. So make sure you get that right. So which tax return type do I select? This kind of goes for new businesses, thinking about your taxes. Anybody that's in QuickBooks, make sure you set this up properly. Just kind of clear up some confusion about the different types of tax returns we have as businesses and who files. So easy ones to get through. If you're a C corporation, Form 1120. That's it. That's the only way. That's the corporation tax return. S corporations, if you're sure that you have filed the S election and you are an S corporation, then that is Form 1120S. For estates and trusts that are trying to do their taxes, always Form 1041. And then, I shouldn't say always, but in general, estates and trusts that need to file their own tax return is 1041. And then limited partnerships, general partnerships, file Form 1065. It starts to get a little bit more complicated when you're a sole proprietor. Sole proprietors usually file their business taxes with their individual return, so on Form 1040. Not always. Be a sole owner of a C corporation, for example, goes on Form 20S. And then in the States, it can be a little bit of added complexity there too. LLCs are the tricky ones. They can be filed on Form 1040, Form 1065, Form 1120S, or Form 1120. Any of them really, except for the estate tax return. So it depends on your election. If all you've done is you're a sole proprietor and you set up your LLC and that's all you've done, then you're going to be filing that on your individual tax return. And in many states, if you are married and the only two owners of the LLC, only two members of the LLC are you and your spouse, you're also going to be on your Form 1040. If you have more than two members, or if you have more than one member and not two members that are spouses only, then your LLC is taxed as a partnership. If you can also file an S election as an LLC to be taxed as an S corporation. You would know if you've done that, so then you file 1120S, and you can also elect to be taxed as a corporation. Okay, very good. So easiest thing to do, review your tax return from last year, make sure that you are setting your book up for the good. So then we get into kind of QuickBooks specific things, but really it's not. It's that means the categorization section of your program. It means going to where all your accounts and the transactions from those bank accounts flow in, and you make sure that you've categorized everything. You look out for anything that has been excluded. Maybe you excluded something by mistake. You really don't want to exclude transactions from your bank unless there's a good reason from your books. Loan payments, tricky to categorize. You want to make sure that you have a workflow set up for that, where the loan payment is actually being split between the principal, which goes against the actual liability, and the interest, which is an expense on your tax returns. Very important to get that right. If you haven't set your loans up, you can actually the loan and how much is principal, how much is interest, and you can split those in your QuickBooks or in whatever accounting software you're choosing to use. Payroll transactions, also very complex sometimes. If you're trying to calculate your own payroll and you don't have like an automated system set up that's doing this for you, it can be really tricky. QuickBooks, if you're a QuickBooks Online customer, I highly recommend that you do your payroll with QuickBooks. It's really just out of the box, everything works. It puts the transactions in your bank just fine, and it doesn't even let you change them, which is really the way it should be, without making some kind of an adjustment. So payroll transactions, very tricky. Some of what you are paying out with payroll, you've collected from the employee and you've just held on to them until you're paid their withholding. Some of it is taxes that is an expense to your business. It varies, right? So you want to be really careful about how you're categorizing payroll transactions. The entire amount, the amount that you actually pay the employee is not the full expense of that payroll, as business owners well know. So you want to make sure those things are categorized properly. So what do I mean by tricky transactions? Things I see a lot with QuickBooks: cash deposits. If you just go and put a bunch of cash into the bank, I will see many people categorize that as income automatically because it's a green number and money in is income. Don't get taxed on things that you've already counted. If you already have a sales receipt or an invoice or something in your software, you're now going to get that twice. You need to make sure that the money that goes in the bank is depositing money that was entered into your books from a sales receipt or an invoice, et cetera, et cetera. If they are cash sales that are not otherwise represented in your books, then I would suggest creating like a monthly sales receipt or even a quarterly sales receipt that just accumulates all of the cash sales from that period, and you enter it at the end of the quarter, and then those cash deposits deposit that amount. Checks are sometimes tough to remember, especially if you're doing year end and you're kind of, as many business owners are catching up at the end of the year. It's hard to remember, well, I don't know what I wrote check 104 for. Number one, keep a good check register. That's kind of the obvious one, but also it's possible a lot of times to get check images from your bank. And so if you can download that as like a PDF, it can really help you understand what that is. Credit card payments, very often, if you have your credit card and your bank both connected to your QuickBooks, you have both sides of the transaction being imported. So you want to make sure that those two sides of that transaction are linked, that they're not being duplicated in both accounts in your books. So the payment on the credit card is linked to the money out on the bank, that you want to make sure that those match the other. I usually get people into a workflow where either one side or the other, they book it. So they maybe you have fewer transactions on your credit card, so it's easier to do that. So you book the credit card payment properly coming from your checking account or whatever, and then when you get to that checking account transaction, it QuickBooks or your accounting software should just see it and say, oh, I'll match to that one. That's the best case scenario. And then unknown expenses, I always find as a tax preparer, I appreciate having like a catch-all category, and rather than leaving things uncategorized, which means they're not in your books, categorize everything. And if you're not sure what it was or how it should be categorized, make an account in your books, an expense account for like, ask your accountant, or even if it's an income account, ask your accountant. Um, as a tax preparer, that's that's very helpful for me because I see that on the profit and loss statement, and I want to ask questions about it. So then I can ask the right questions to get the right information. Um, so other things that are important to get going in your year end and make sure that your books are up to date before you pass them off to your tax person are assets versus expenses. So whenever you purchase something for $2,500 or more in general, um, that is an asset and it has to be depreciated. It can't be expensed right away. Um, there is bonus depreciation, which makes things expensed, but your tax person does that. You want to enter it in your books as an asset and let the tax person make the adjustments. Um, so for anything that's $2,500 or more, create an asset account, not an expense account, for that particular thing. So say you bought a stove and it cost you $5,000. You create an account in your QuickBooks called stove, and the initial purchase, you book it against the asset account. So then that will be an increase of $5,000. That asset is now $5,000 in your books. You won't see these on your income statement, on your profit and loss, until your accountant goes in and gives you the journal entries to depreciate them. So don't expect to see them. And also note anything that you actually sold during the year. If you sold anything or even just got rid of anything, you want to make sure that there's a transaction, especially if you have income from it in your bank. Sometimes like you don't have an asset set up for that thing, but you sold it for $800 or whatever it is, a car or whatever. You should create a $0 account, a $0 asset account, and book the sale against it. As a tax preparer, when I look at your balance sheet, I'll see a negative asset and I'll immediately know, okay, I need to ask questions about this. So even though you might think, oh, I can't have a negative asset, that doesn't make sense. This is really, here's my books as of right now to your tax accountant, and your tax accountant is going to get them understand the state of your business and like the financials from the previous year, know how to translate that into your tax return, and then give you the proper adjustments to get your books set for the coming year. Reconciliation. I see so many clients that say they don't have the time or it's too much work or to reconcile their accounts. It is really important to do, because if your accounts reconcile, it means that everything that has happened in real life is reflected in your books. That's what we're looking for. We're just looking for a record of what your business has done over the past 12 months. So if those past 12 months are reconciled, then we're all good. So it's really important to do reconciliation. Make sure you reconcile bank accounts, loan accounts, and credit card accounts. Like I said, the goal is accurate books and accurate tax returns. The temptation is, if it's not reconciling, to always use the reconciliation adjustment, which QuickBooks has like since hidden even more than it's hard to get to, but you can get there. And QuickBooks the temptation is to use that adjustments account to fix everything. Oh, this is off by $50. I'll just put an adjustment in. If it's off by $50, it means you're missing something from your bank, or you have something duplicated in your books. Trace it down, like chase down the reason, and it's worthwhile in the end because you have accurate books, accurate tax return, and usually accurate tax return means you pay less taxes. So, because usually inaccurate tax returns are not because you're lying, it's because you made mistakes. And the IRS has set things up so that the most common mistakes are not in our favor, they're in their favor. Good. So the reconciliation process helps you locate like duplicated transactions, things like that, things that are missing from your books. So really important to do that too. Hopefully that just gives us a little bit of a like refresher on what to do, what the kind of the big steps are to do. Like I said, I'm available to help if anybody is having trouble here at tax time, and I'd be happy to help you clean up your books, help you get set up on QuickBooks, help you do your tax returns. So anything that you are needing to do, I'm available. Very good. So May, I see we might have a couple questions.
Yes, thank you for that, Adam. Yes, we do have a question here. This is one of our attendees, Roberta, and her question is: do I need to make a journal entry in my QuickBooks for mileage method used in my tax return?
Yeah, it's a good idea. I think that what you're probably referring to is the depreciation portion of the mileage. If you have the asset booked in your books, um, to be honest, most people that are claiming mileage on their tax return are not doing this, and then because for the sole reason that usually when you sell a vehicle, you don't sell it at a gain. So typically, it doesn't end up mattering. But um, if you, for example, have a truck or something that you've taken bonus depreciation on, then you are going to have a gain when you sell it, and so your you should have your depreciation properly accounted for. Of course, if you had bonus depreciation, then it's all gone, or maybe some of it is gone, and then you need to depreciate the rest based on mileage taken. But um, your tax accountant should be able to provide you with the journal entries. If they're not, um, I would suggest contacting the Tax Resolution Help Center, and we can go through your tax returns, see the history, and we can give you those journal entries and get your books looking just right. Now, I will say it brings up a common misconception, which is that your books are not intended to exactly match your tax return. There's a whole portion of your tax return that's book tax differences, and you reconcile that on the tax return side, not on the book side. So generally, we want the books to follow accounting practices and the tax return to follow tax return practices, and the reconciliation between the two happens on the tax return side.
Okay, thank you so much for that very clear explanation of that question, actually. Anyway, I do have here another question. Hold on. Give me 1 second. Okay, this is from our live stream in Facebook. This is through chat, and the question is: what is the best way to make sure my tax guy knows to deduct the cost of assets and depreciation if we don't have it as an expense?
Um, yeah, you should be providing your tax accountant with a detailed balance sheet. Um, if you have your books all clean and your balance sheet is available and accurate, if you if you provide a balance sheet that is broken out by month or by quarter, then your accountant should very easily be able to see when a new asset account has been created during the year. that would immediately set off a tax preparer um, alarm bells to say, is this a new asset? You know, and all your assets should be represented in your tax return. If he goes back to your prior year tax return, doesn't see that machine, and now on your balance sheet he sees a machine, then your tax preparer should know that that needs to be added into your tax return, and they need to get the details from you of the purchase of that equipment. And then best case scenario is your preparer is giving you the scenarios and the options on what to do with that asset. Um, Generally, businesses take as much depreciation as possible, but it's not always the it's not always the best thing to do, and it's good to give the options to the client. So a good detailed balance sheet is the way to do it. If you don't have a good detailed balance sheet, you need to make a list of everything you purchased in the year and make sure that your tax preparer has that list, date, amount, what it was, and then they can ask the questions from there.
Okay. Thank you so much. That's actually quite hard to do for me because it's by a year. That's actually a lot of transaction that you have done. Um, so what is,
Well,
I
keep in
guess,
mind that as a business, it's only we're only concerned with things that you purchase that are $2,500 or more. So
mm,
those should be memorable. I mean, hey, maybe your business is doing really well. You buy lots of things more than $2,500, then that's great. But
okay. And also, I think the follow-up question is, what is the best advice that you can give to those who are just starting their business when it comes to filing their tax return?
yeah, great question. Um, so the I would say focus on, especially when your business is first starting. You know, sometimes when your business is first starting, it's taking off and it's really hectic, and you're trying to get everything else set up. Other times, you're trying to get a business off the ground. If you're in that second camp and you don't have a huge volume of transactions yet, it's worth. Remember that accounting software is a deduction on your tax return. So whatever the cost of it is, it's worth getting it just to get used to it, so that when you have more complicated books, you have a workflow and you have a process, and then it's not difficult to get the to go from 100 transactions a month to 10,000 transactions a month and get everything in your books. Because once you've grown to that point and you don't have a good system, backpedaling and getting that put back in the bottle is very difficult and will be very expensive. Because when you come to somebody and ask for a cleanup, and all you have is shoeboxes full of receipts, as we say in the accounting business, uh, you're going to be paying for that person's time. So um, while you're starting, make accounting, make bookkeeping, make keeping track of the pulse of your business through reports and balance sheets and income statements. Make financial reporting uh, a key part of your business. And if it's not your thing, um, you know, and maybe you can't afford to hire someone, but take some classes, take some QuickBooks classes. I've helped many clients where I give them a couple of QuickBooks lessons, like one or two lessons. Say, I'll meet with you for an hour here and an hour there, and we can talk about what you can do better in your process.
All right. Well, that's actually great to know that you are open also in taking classes, Adam. So, can uh, do you have an email? How do we contact, or how do our audience will contact you if by chance they needed help?
So I think it would be great if you could just contact me through the Tax Resolution Help Center, and
Okay.
yep, and I'll be able to get right back to you, and we'll get started on your business needs.
How about your email? Maybe we can give this email to them.
I don't think I have an email set up yet with the Resolution Help Center, but when I get one, I'll provide it.
Okay, that's great to know then for our audience. Well, thank you so much. That's actually our last question for today's session. Anything else that you want to add or maybe take away?
No, it's great. I just hope that in future sessions, I'll kind of dive into a couple of these and maybe do some live demonstration on a QuickBooks to show you some of this stuff. I just wanted to do kind of an overview this time, but in future sessions, I'll kind of jump into some of these things in a little bit more detail, and
Mhm.
you'll be able to see a real demonstration in QuickBooks Online. So look forward to that.
That is something that really worth waiting for because yes, a lot of new businesses right now don't know how to use QuickBooks. They do need that lesson. And Adam, thank you very much for today. And thank you for devoting your time to impart your expertise and providing us your actual examples that will really help our audience and me as well. Thank you very much. I hope you have a great evening. Good night sleep after work.
Alrighty, thank you.
Okay. Thank you also.
Take
Bye
care.
bye. All right. And I also want to thank everyone for joining our session for tonight. Our commitment is to help you reduce your taxes and, of course, increase your wealth. We do this with the Try Tax method, if DIY, do it yourself, DIT, do it together, and DIA, do it all. Three methods, one solution, reduce stress from no IRS or state tax debt, and a happier, healthier life. And if you are not yet a member, please join for less than $20 per month. We need your support to continue to offer more of these sessions. And since it is now tax season, we have many sessions to help you do a better job of doing your taxes yourself. And of course, if you want help, we have a team of experts who can do your tax return for you. And please don't forget to check our website at taxresolutionhelpcenter.com. And please also join as a member today for only $19.95 per month. And again, thank you all for attending for tonight's session. See you all tomorrow.